It's Friday night. You deposit your paycheck, $5,000. The bank teller smiles and says, "You're all set. Your money is safe with us." You go home. You sleep. You dream about what you'll do with that money. But here's the thing. While you're dreaming, your money isn't sleeping. It's working. It's being loaned out. It's being traded. It's moving through a system so fast and so hidden that you'll never see it. And by the time you wake up on Saturday morning, that money has made money for the bank. Not for you, for the bank. This is the story of what actually happens in those 8 hours between deposit and sunrise. Let me introduce you to Sarah. She's 28, works in marketing, makes decent money, about $5,000 every other week. On this particular Friday, Sarah walks into her bank branch with her paycheck. She's been banking at the same place for 4 years. She trusts them. She deposits the money. The teller tells her it'll be available Monday for withdrawal. But Sarah doesn't know something important. At that exact moment, her money stops being just hers. See, when you deposit money in a bank, you're not depositing it the way you'd hand your money to a friend for safekeeping. You're doing something legal that sounds simple but changes everything. You're giving the bank permission to use your money. The bank can loan it. The bank can invest it. The bank can do almost anything with it, as long as they can pay it back when you ask for it. This system moves $400 billion every single night in the United States alone. $400 billion. Just overnight. Just while people sleep. Think about that number. Imagine you could see it. Imagine watching $400 billion flow through invisible pipes, moving from one bank to another, being borrowed, being loaned, being traded, all night long while you're unconscious. That's the actual infrastructure of modern banking. And Sarah's $5,000 is part of that river. The reason this matters right now, in 2026, is because the world just changed. For over a decade, interest rates were basically zero. Banks got free money from the Federal Reserve, so overnight lending was a nice bonus. But now interest rates are up. The Federal Reserve is paying banks to borrow money. Banks are competing to take that money. The overnight market is suddenly important, suddenly visible, suddenly worth paying attention to, and nobody explains it. Let's follow Sarah's $5,000. It's 4:47 p.m. on Friday. The bank closes in 13 minutes. Sarah's deposit gets entered into the computer. The bank now officially has her money on their balance sheet. It's an asset. But the bank also has a rule. They're required by law to keep a certain percentage of deposits on hand in case customers show up asking for money. For a checking account, that's usually 10%. So out of Sarah's $5,000, they have to keep $500 in the vault. Physically, or in their account at the Federal Reserve, the other $4,500, that's free to move. The bank closes, the doors lock, the tellers go home, Sarah goes home. But at exactly 5:13 p.m., something happens that Sarah will never see. A bank manager in New York City gets a message from a bank manager in Dallas. The New York bank ended the day with too much cash, millions of dollars sitting around. The Dallas bank ended the day short. They need cash. So the New York bank calls and says, "I've got money. What's your interest rate?" It's a negotiation that lasts maybe 90 seconds. They agree on 4.8% interest. The New York bank loans the Dallas bank $1 billion. Overnight. Just until tomorrow morning. This is called the federal funds market. And it's happening thousands of times every night. But here's the twist. The money the New York bank is lending to Dallas, a lot of it is Sarah's money. And the money of millions of people just like her. Deposited, trusted, used. The Dallas bank receives the $1 billion. They immediately use it to buy treasury bonds, government bonds, safe investments. They sell those bonds to another bank in Chicago with an agreement to buy them back tomorrow for slightly more money, maybe $1 billion and $2 million. The extra $2 million is the overnight interest. The Chicago bank holds those bonds for a few hours. Then they sell them again to a bank in Los Angeles with the same arrangement. Buy back tomorrow for slightly more. By 6:30 a.m. on Saturday morning, Sarah's $5,000 had moved through 4 different banks, has been used to buy bonds 4 different times, has created profit 4 different times, and Sarah will have no idea any of this happened.